Hi guys, it's Matt from Optimus Futures. Today we're going to have a technical study about time frames. So today we're going to talk about multiple time frames and the fact that you have to have a reference, not only looking at one time frame but a number of time frames, and especially when you are a short-term trader, you don't want to base your decision just on one time frame alone, but rather look at support and resistance on the number of levels. So I'm going to use MultiCharts today. It's one of my favorite probably charting softwares out there, and in the next few weeks and months I want to choose topics that I think are very important for day traders and go over them, and they're going to be more of a classical look and observations of trading on charts. So I'm going to start. So here we have I made three charts. One is based on 15-minute. So I chose the micro here, and here we have one for 30-minute and another one that we have here for 60 minutes. Now you might have a number of multiple platforms, and you might have multiple screens, so it's okay to expand it on other screens if you have. I just while I'm recording it, I'm just using one, but you can always expand it like this on other ones and examine it. I'm just gonna keep it simple and just gonna keep all three like that. So what are we looking at? So the first thing we're looking at, we are going for from short time frame, from 15 to 30 to 60, and basically that is up to you what kind of time intervals you want to choose. But the one thing to pay attention to is that we are going it from a low time frame to a higher time frame. So you can have tick charts, the 5-minute charts, and then use 15. You can maybe use 3-minute and then 10-minute and then the 30, and it's entirely up to you. But what are we looking at? We're looking at levels where you have support and resistance across the platforms. So for example, across the time frames. So for example, if you look over here at around the 30.24, you see that we formed some sort of a support, and the same here you see on this time frame, and the same thing you see on this time frame, right? So now you know that all three correspond to that and around here. And again, this is not exact science. I can't tell you that specifically from 24, it's going to bounce. It might happen from 23, it might happen from 22. It's really, really hard to guess, exactly, especially when you have those, if you see those candle charts and you see here the wicks, right? They're kind of extended. So a lot of people would actually use that, and you can use that, it's fine. It did extend to that area, so you might wait, until it's 30.22. If those levels are broken and they go way below them, it will tell you that there could be potential weakness in the market. But the key is really to avoid, what we want to do is really avoid just looking at one chart and saying, okay, there's support over here and that's it. There's a lot of noise that is happening on short time frames, and the higher time frame that we take each time removes further and further the noise. So those are not only support and resistance levels, but if you happen to be short at those levels, for example, from here, and the market fell and then it fluctuates, you can basically see that those could be potentially profit targets as well if you short it again. So now we have it across here, and across here. Now, again, what you want to do is not only do the support levels, but you also want to look at the resistance levels, right? And those things are very, very visible. So over here, you see that you have it 30, right now you see it at around the 30.44, and same thing around here, the 30.44, and we would see around here, not so much, right? So here we have one, but here it kind of went, once, and then it dropped. But here there was a lot more times I think that it tried to bounce off this area on the short time frame. Maybe not. Maybe I'm wrong. Maybe It's all kind of, let's see, 30.44. No, there was really nothing around here, just a drop. 30.44 here. We have ran into resistance, and here 30.44 resistance. So we don't have the same resistance on the longer time frame, and you're just left with those two. Again, this is not exact science. The markets could bounce from here, but it's always better to have a number of confirmations on time frames. And I think when you analyze, for example, the charts, and you're preparing for the next day, this is where those points, those price levels will play a role. So it's not only that you want to analyze it when you take a trade, but also look at those time frames after the market. So you want to look at them across, right? So you want to open the chart and you want to say, okay, this is on the 60-minute. We had supported those levels, which is around the 30, 32. And then you want to open the medium one and see, was it there as well, right? Was there anything there at that level? Kind of, maybe just once, around here. And basically what you want to look is for very transparent cluster of prices really trying to penetrate there, and they couldn't. So you see here it's very obvious, right? On the 30.24, you see on the shorter time frames, the candles or the 5-minute candles, there were a lot of activity around here, same here, and the same over here. And I would say probably, again, there's no such thing as a guaranteed trade and a guaranteed win, but what you want to do is develop a reference point where you basically have clusters like that. That's it for now, guys. This is just the first thing in examining support and resistance on multiple time frames. I hope it helps you and the instruments with the instruments that you trade. So this is Matt Z from Optimus Futures. If you have any questions about these videos, you can go to community.optimusfutures.com and ask any questions that you have there about charting and software. Me and my colleagues would love to help you there. And if you want to open an account, I'd love to earn your business. It's optimusfutures.com. Thank you, and until next time. Bye-bye.